Morning all. How are you all doing? Happy Monday. Morning, Danny, JC, Sinji, Virginia, Ismet, Rodrigo, Amy. How are we doing? Happy Monday. So I was just looking at the inflation expectations. Quarter on quarter, 2.33. Just trying to work out what that is. Bear with me a sec. Percentage that business managers expect the price of goods or services to change annually. Oh, it's business services. Oh, okay. Next 2 years. Right, okay. I was just looking at, confused me that these New Zealand interest rate inflation expectations, they're the only country that does the inflation expectations. We get the inflation figures, not expected inflation figures. So this is basically what they're expecting inflation to do over the next 2 years. And I was just looking at the numbers going, where do you get 2.5% from? Your inflation is at 4%. So that confused me because I don't usually pay any attention to this. And I just wondered what it was. Anyway, should have prepared that before I came on, shouldn't I? How are we doing? Ismet. Rodrigo, I've said hello to everybody else. Mustafa, Wasritha, how are you doing? So we'll have a look at this week's news coming up in a sec. And we'll whiz through all of the news over the weekend, of which there isn't a great deal. But just to kick off, obviously, New Zealand, we've just had news on overnight. Doesn't seem to be a great deal of movement off of it. We've had a bit of a whipsaw on the news, but no real movement. Aussie New Zealand has actually, I think it's Aussie New Zealand's hit ADR today. Yeah, Aussie New Zealand hit ADR on the news. But yeah, no movement on it. So nothing exciting at all there. So this week's news, let's go the weekend first. So we finished on Friday with Bowman saying they don't see any rate cuts warranted this year. So the Fed now have a forecast from August, depending on who you listen to January next year. So at some point in the future, the Fed will drop the rate on the US dollar or raise it, depending on what happens with inflation. So that's about as accurate as you're going to get with the US dollar directional bias, basically, at the moment. It will go up or down at some point. That's basically all we know. So, again, more confusion out of the Fed, not really having a clue what the hell they're doing, what's going on. That was Friday. Over the weekend, nothing much has happened at all, really. We've had minor escalations in the Middle East with what's going on with Israel and stuff, but nothing exciting. North Korea has been doing some more testing on weapons, usual stuff. I'm pretty sure North Korea at some point are going to blow themselves up. But anyway. So, yeah, no news to speak of over the weekend. So nothing exciting has happened. No gaps, nothing generally to look at. There's no news today. It's very, very quiet today. We've got Jordan speaking at 5:45 this evening. So that's probably the highlight of the day. Jordan doesn't speak that often, although starting to speak a little bit more at the moment. This is we've had one already this month, I think, from Jordan, or maybe it was the end of last month. So there's potential for some volatility off the Swiss franc later. Unlikely, because Jordan never actually says what they're going to do. They just do it. But we'll see what happens with that. Claimant count change tomorrow for the pound at 7 o'clock. Doesn't really do an awful lot. Sometimes it does, but most of the time, claimant count doesn't do a huge amount. It's the unemployment rate that we're interested in. So first main news tomorrow is tomorrow afternoon, which is the PPI figures for the US. We've got Powell speaking half an hour after market open tomorrow. Then we've got the wage price index, which is a bit similar to that. It doesn't really do an awful lot. And then the main news this week is here. So Wednesday afternoon is the main focal point for the week, which is the CPI figures for the US. So this is the important one. Inflation for the US. What is it doing? If this pops, again, they're expecting it to come down year on year. They're expecting not a lot of movement over the last month. If that pops, that US dollar is going to go through the roof. because it means they're just going to put that interest rate drop back further. So very, very, very important number Wednesday. We got retail sales coming out at the same time, but that's going to be like literally run over by the CPI numbers. So very, very big one Wednesday. So I'll be on for streaming for that. Thursday, we've got unemployment rate for the Aussie. So potential Aussie movement again on Thursday. We've got unemployment claims for the US. And then Friday, there's no news again either. So no news today, no news Friday. Little bit of news on tomorrow, but that's really going to be overrun by that. So that probably won't do an awful lot. And hardly anything on Thursday. So it's really, really, really light news week this week, apart from Wednesday. So we've got one massive news event and a load of rubbish. So it should be just normal movement week. Shouldn't see too many ADRs really this week. Should be just sort of normal price action, but we'll see what happens. So there's your news. As you can see from the dashboards, RSI totally flat, dead, absolutely nothing to look at. You can see from this New Zealand dollar, US dollar chart. Yeah, we haven't done anything last week. We haven't gone anywhere. Nothing's moved. We literally are right now. That's the beginning of last week. That's now. We haven't moved a pip. Literally, it's nothing happening over the last week, much at all. So totally flat dashboards. Everything that I've got into, I've got out of. It's turning into a lovely month this month. So far, but yeah, nothing to look at there. ADRs, the only thing, as I said, we've had is Aussie New Zealand. However, that's not really an ADR hit. If you look at the 5-minute chart, that is the low of the spread candle at the open. So the market opened here. They spread it by half an ADR, basically. So that's not an ADR hit. Basically, that is the market. The broker spread it by half an ADR, so it's moved half an ADR up, basically. So there's no ADRs today. So there's nothing to look at, as you would expect. It's a no news day. Nothing's moved last week. So yeah, one of those. So we'll run through every pair today, have a look at everything, see where everything is, see where everything's going. Fundamentally, the US dollar is really the only thing that we're going to have any impact on today. So this week. So this US dollar inflation figure, we're sitting at 3.5 and bouncing up, which is not what they want to do. They want to fall in line with everybody else. They want it going down. It's not good. So I can see why Bowman said what he said on Friday. Yeah, there's no real reason to drop interest rates this year. If this number tomorrow, or Wednesday rather, comes out higher than forecast, I think I probably agree with him. We're pushing it back until January, which means we're going to have a neutral to bullish dollar for the rest of this year, which is not going to bode well for the stock markets. So that bull run, or bull market that we're hoping the US is back in, has faltered, starting to rally back again now. But this is how bear markets start. So we'll see. And there's a potential, I think, for a decent pullback on this. If that interest rate doesn't come down on the US and that inflation keeps going up in the US, there's potential to raise interest rates, which is going to be bearish for the stock markets. So interesting times at the moment. And obviously, if a war kicks off, none of that matters at all. Indices this morning, not really done anything. So DAX pre-market range, it's just basically wicked out of it ever so slightly. We're sitting inside. FTSE's trying to break to the upside at the moment, but nothing much happening on the indices either. Dull. So we'll whiz through all the pairs today and see where everything's going. Morning, Pwam. What do I think about the next gold move? Well, it'll be up or it'll be down, unless you've got a crystal ball. You know as much as I do, because I can't predict the future either. Afternoon, it's time. Morning even, Gregors. No news, good news. Good morning. In those results you just showed, which strategy? That's H1M5 mean reversion. Jordan spoke early last week. Was it last week? Was it? Yeah. Yeah, I know he's becoming a little bit more regular. Yeah, there you go. Wonder if this is going to become a regular thing on a Monday, which would be nice. Not that that's really going to help because never says anything. Yeah, not speaking. Well, not forecast to speak next week. Mind you, it's bank holiday. No, it's not bank holiday for us. Ours is later. It's not a bank holiday then. 27th we've got off. Yeah, so it's one of those things that just don't get anything out of them. Just don't say anything. They're renowned for it. Keep stum and then suddenly drop a bomb. That's what they like to do. Financial bomb, that is. On the position trader EA, if you have the RSI setting on and you open a trade manual, will the EA open a second trade according to the RSI? No. No position. If there's a position open, it starts a position. Doesn't. As soon as you take a trade, whether it's taken with the EA, whether it's taken with the buttons, whether it's an ADR, whether it's an RSI, whatever, there's a trade open. All it does then is scale in. Yeah, it ignores RSI. Once you've taken a position, your strategy is get in on a condition. Once that condition is met, the trade is taken, we scale in. The RSI has nothing to do with it. Look at this, for example, right? If you got in, can't see it because it's behind my head. So if you got in on that RSI extension, yeah, short, and you said, I want to scale into this, yeah? If this thing does this for the next 6 months and gradually grinds up, yeah, you will never take another trade. Yeah. Your initial entry is based on a system criteria. Your scale-ins are based on distance it moves against you. That's it. All we're doing is we're adjusting our price once we've entered a trade. So it doesn't matter how you get into the first trade. You can press the button. It can be an ADR hit. It can be an RSI extension, whatever it is. It's irrelevant. After that, that's what I keep saying. How you get into this market is irrelevant. You can flip a coin if you want to. Got nothing to do with anything. What happens after is how you make money. Nothing to do with entries. Entries are trying to time the market. You can't time something that is random. So you get in and then you adjust your price when you see what the market is doing after the market has decided which way it's going to go. Are you using the market reverse alerts EA or position trader EA? I'm using position trader EA at the moment, but market reverse alerts EA will give you virtually the same results. So well, it won't. It'll give you slightly different results, but it's the same strategy. People focus so much on strategy. It's the least important thing. It really is the least important thing. Give me 1,000 strategies. I'll show you them all failing, all of them. Yeah, remove the stop loss and I'll show you them all succeeding. It's got nothing to do with it. Strategy has got nothing to do with making money at all. All about managing your position. Right. So I just want to see what's going on with that. Pound New Zealand. It's coming back down again. I knew it was. I was toying the idea of taking partial on this, but I'm not going to. I'll have to leave it now. I'm hoping we're going to test this propulsion gap on the Pound New Zealand. But this reversal, there's potential for this to be a lower high. But there's also potential for them to obviously come up and fill the gap. So that's my play at the moment. It's just getting out that double top. Let's see. Right. So I'm going to whiz through all the pairs this morning. We'll have a look at everything, how everything's going. I've got a fairly decent exposure on at the moment, so I'm not looking to get into anything else at present. But obviously, double at the moment, because we are so range bound on everything and we've got a very, very light news week. Double tops and bottoms basically are probably, got a good chance as anything of starting a move off, haven't they, at the minute, because the market's really got no catalyst this week until Wednesday. But there are other bits and pieces like the Aussie dollar unemployment rate that may well move the market. So we'll see how we get on with the news this week. But I don't think there's an awful lot of movement really this week because there's nothing to move it. Yeah, the market's just going to sit around and wait. So we'll whiz through them all and see where everything is. Yens, we'll start with the yens actually, because we're obviously waiting to see what happens with the intervention. But so far, the second intervention for US at least is holding. So this, we pushed up obviously last week into this level. So this is where the week started. We had a lovely little gradual 3-day grind, and we haven't managed to get back to that second batch of orders that came in after the intervention. So this level seems to be being held by the market at the moment. But obviously with the CPI number coming out on Wednesday, if that is going to be higher than in forecasts, there's a good chance that we're just going to drive straight through there. So we'll see. But doesn't really seem to be having an awful lot of impact, the intervention at the moment. But like I said before, what happened after the last intervention was we had a good 2 weeks of that. Then the market started to collapse down against the yen. So it really started to power up. So we'll see what happens. But so far, all the yens fairly stable last week to slightly bullish. Yeah. So every single yen pair pushing up at the moment. So weak yen, no real reason to do anything with it at the moment. There's no signals there that say it's bullish or bearish. It's just kind of grinding back into the intervention. So again, I'm just not interested in the yen at the moment until we get some kind of clear understanding of what they're doing with the fundamentals moving forward. And the next change we've got, I think, is the end of this month. So we've got the CPI coming out on Friday. No, it's not the end of this month, is it? Where is it? Oh, there. So 14th of June. So yeah, it's a month away yet. So, you know, we're not going to get any real indication as to what they're doing with their interest rates until middle of June. So it's very, very hard to trade the yen at the moment. If you get into anything, you need a day like that, and then you need to be out of it because it's, as you can see, it's just not doing anything at the moment. It's just not worth even looking at. You either need to do a long-term trade on this, so you need to have a long-term stance, bullish or bearish, either whenever, however you think the economics are going to unfold in Japan, and hold it, or just forget it for the minute. So if you're going to go short on it, bear in mind the swaps are going to eat you alive. So yeah, just not really on the radar at all. So all the yens basically, who knows? We may or may not get some movement. There's not going to be any more interventions on it unless we get a higher CPI number on the US dollar. If inflation goes up and US dollar rallies, then there's a good chance that the Japanese might, you know, shoot another missile. But we'll have to wait and see. It needs to get all the way up to there yet, and that's 125 ADR. But bear in mind that ADR number is based on 2 400 ADR days. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. Yeah, so that ADR 10 figure at the moment is incorporating that and that. So tomorrow that ADR number is going to jump dramatically down. Yeah, we're sitting at 223 ADR at the moment. As of tomorrow, that comes out of the equation. So if you change it to ADR 9, you'll see that number drop because it will remove that from the equation. We've still got that in there. So give it 3 days. By the end of this week, that ADR number will have dropped back down to these sorts of ranges again. But even so, just no movement is there. So forget them for the minute. So coming up this week from the Australian perspective, we've had the New Zealand dollar inflation expectations, but we've got wage price index for the Aussie on Wednesday, and that's pretty much it until Thursday morning for the unemployment. So, sorry, that was it. Sorry, that's what I meant to say. It's unemployment this week, but that's it for the New Zealand. So it's literally just Aussie this week. So looking at the Aussie, because obviously the Aussie and New Zealand moved together, Aussie has gone absolutely nowhere. So I suspect they're waiting for that number to come through. So that's the last news we had. And as usual, it's the same thing. We get news, nothing, news, nothing, news, nothing. We've got news Thursday. So depending on what happens with the unemployment rate, the market will decide to take it in one direction or the other. But right now, there's absolutely nothing you can do with this. It's flat as a pancake. So Aussie CAD completely sideways. If you want to get into any trades, you could try last week's high. That's the high from 2 weeks ago, which is just happens to be that level there. So ignore that one. We did react from it actually last week, but that high there for shorts. So ADR hits to the upside for shorts. We're at the lows at the moment, so it's a buy. But look, you're going to literally get an ADR out of it. So it's just not worth playing with at the minute either. Aussie dollar Swiss. Well, I mean, what do you do with it? It's the range at the moment is 125% of ADR. That's it. That's your range. So short the highs, buy this area down here in propulsion. If you get there, nothing much else you can do with it. It's dead, as you can see from RSI. Aussie dollar, New Zealand dollar. So this is, again, we're last sort of 2 weeks since that previous news event, we're stuck sideways. So again, any shorts up here in this propulsion area, they may reshort that. We've got the lows down there from last week, which that wick kind of tapped into, but for longs. But again, there's no real movement on this sideways. We're waiting for some news. So Aussie New Zealand's been in this horrible grind, which we broke out of last week. We're back up in that area again. So we were sitting there for a week after this second push that we had. I still think there's a very strong chance this is going to come back down into here. We're going to at least retest this low. So that would be equivalent to sort of a 61.8 retracement. 38 retracement on fib. So that would be kind of a shallow pullback look. So I still think there's a good chance that we'll pull back into here. And then obviously whatever. So that news that comes out with the unemployment rate, if unemployment rate goes up this week, if it goes down, so we'll have to wait and see what happens with those numbers. But if we get unemployment rates not moving, I think there's more chance. I think there's more chance if unemployment rate comes out as forecast, we'll be down here. If it comes out higher than forecast, we'll be down here. So there's more chance of it going down, I think. But it's not moving at the moment, so it ain't going anywhere. So yeah, sideways. We're bang in the middle of this range at the moment. So your guess is as good as mine today. Aussie US. So nothing much happening last week. As I say, everything this week is just, or last week rather, just flat, dead. So highs, we've got a lovely double top. This is a previous monthly level. So yeah, good looking opportunity for shorts out of that. Okay, so you got the last month's high, which we tapped into. Then we double topped it last week and it dropped. You've got the previous month's high up there as well. So this whole area here is a lovely resistance. So we've already moved out of it. You've had the reversal alert short. It's pulled back. It's retesting. So potentially it's coming back down from there. However, if it does push back up into those highs, obviously that's where you scale in. So prefer it as a short at the moment, especially with the news this week. So if we get negative news from the Aussies after we've got that CPI number coming in. So don't forget this week's news. We've got the CPI on Wednesday, and then we've got the unemployment rate for the Aussie on Thursday morning. So if that US dollar inflation bounces, that's coming down. And then if they get a as expected or worse than expected unemployment figure, that's coming down. You could be down there by the end of this week. So there's a good chance, I think, of that happening this week, but we'll see. But right now, bang in the middle of nowhere. So RSI extension to the downside. Had a few good trades on this one over the last couple of weeks. So it's lovely RSI extension there. Quick out and then flip short and out. So pretty good. Pretty good at the moment. Obviously, as long as the stuff's going up and down, it's easy. CAD Swiss really sideways. So we had that big, strong push down on the safe haven run, which got undone, V-shaped recovery on the same day. So this is kind of really the low. All we did was we pushed up, sat around, we pushed down, and we've sat around. Yeah. So retest of the propulsion move to the upside. If we go that way, that'll be a good short. If that doesn't work out, short up there, second entry. So that would be a good short area. That would be a second entry. By that time you'll be in. So if we do get up into here, I will be shorting it because RSI will get extended. So to the lows. So if you take out the safe haven run out of the equation, that was your low. Yeah, so there. So then we had the safe haven run, which got undone. So this area, this propulsion actually kind of ties in quite nicely. It's not really a propulsion move, it's just part of a V shape, but it's this area here basically. So if we do push down into there, that would be a good buy and good sell there with a couple of entries. You've also got a monthly backup for a third there as well. So it's nice and easy price action on this one, but right now it's bang in the middle of nowhere. So that was a good entry last week. There was an RSI extension there, which didn't take for some reason. I think I was short. Yeah, there's a sell there. Yeah, I think I was short at the time. That's why. So nice reversal and retest on the way back up. But obviously, as you can see, sold it straight off on Friday when we retested that news event. So difficult at the moment, but I'd much rather be, I think I'd rather be shorting this at the moment than longing it because I think that Swiss franc, it doesn't seem to be weakening anywhere near as much as you'd expect on an interest rate drop. And I think the market is assumed now that they are not going to drop interest rates next time round with the Swiss franc. So that Swiss, we're at 1.4. It bounced quite heavily, but the interest rates are absolutely fine. Inflation is absolutely fine. If this thing bounces again, so what? It's still below target. There's no reason for them to drop this any further. So I think with the Swissy, obviously, you know, it will power up massively if there's any problems. So I'd rather be short on this because at the moment, the Canadian dollar is just going to sit there and do nothing. So CAD Swiss at the moment, nothing. But if we get up into this area, good looking short. And longs out of this area down there, if we get there. Euros. So at the moment, the euro is bearish because we are dropping interest rates next month. So we know it's 99.9% sure at the moment that we'll be dropping the interest rates. The euro PMIs are coming out next Thursday. Then we got the German CPI on the following Wednesday and the Spanish CPI. And then the week after that, I think, is the decision. Yeah. So, and then we go into the decision. So Thursday, the 6th of June. So we've got two CPI figures coming out before the rates. We've got obviously the German CPI, and then we've got the European PMIs. So at the moment, with all euro pairs, the market seems to be factoring in that rate drop. So as long as we get it, and I'm pretty sure we will, the stance on the euro moving forward is going to be nothing but bearish. However, that will change based on the cross that you're trading against. So if you're trading euro US dollar, for example, and the US dollar CPI number goes up, that's going to come down really, really fast. If the pound suddenly says, right, we're going to drop the interest rates in July, that will become neutral. against the euro. Yeah, because they will both be dropping interest rates, and they'll both be doing 0.25% pretty much every month, 2 months moving forward. So there's no no bias either way for those. So you've got to kind of take the euro at the moment as it is bearish, unless the thing you're trading it against is even worse. So euro looking for shorts, but at the moment, obviously, it's very orderly market structures, just really nice on it at the moment. So I had a couple of longs there, had a short there from last week. I'd much rather get in short than long. I'm almost on the verge at the moment of turning the EA onto short only mode for euros, because if it does start to go and it starts to drop really fast, if you look back at what happened after COVID, the euro collapsed and it didn't stop. It really, really dropped badly. So I don't think it's going to happen that fast, but you've got much more chance of that happening than you have of it grinding or getting into a squeeze in that direction. It's more likely to squeeze short. So I'm still not quite sure, but it's kind of, you need to start making decisions now because we've got 3 weeks until the rate change. So, or 3 or 4 weeks. So shorts, ideally. So any ADR hits to the upside, any RSI extensions to the upside, you should be pretty safe. It is holding at the moment, as you can see. Yeah, so this last news is holding, but it hasn't got anywhere. Yeah, so we had a big fundamental and then looked like market structure was breaking to the upside, and then it's just stopped. Yeah, there is no reason for anybody to position themselves massively long on anything euro at the moment. So a news event will move it up, but it's highly unlikely to move it far. So euro odd looking for shorts. Euro CAD, same thing. Lovely shorts on this one, as you can see. Took a cheeky long out of that RSI extension on Friday and got out very, very quick in that propulsion gap. So there's a trade there. You can't quite see it's behind the candle, but that was an RSI extension I got into on Friday off the back of that news and took it off in the middle of the propulsion gap before it dropped. So yeah, shorts again, Euro CAD. So same with the CAD. If the US dollar rallies, the Canadian dollar will gain a little bit of strength with that. And obviously that will be the outcome. So Euro CAD short, Euro US short. It's been grinding up quite nicely at the moment, but as you can see, is nothing but a massive range. We came out the top of the range with a lovely reversal alert. So yeah, good looking shorts. So if we can, this week, if you see it push up into that propulsion gap, it's only an ADR away. If we can push up into that propulsion gap, that'd be a good short. If it gets up to the highs of the week, good short. Other than that, I think it's just probably going to break to the downside. So be looking for any RSI extensions to the upside. Short it. Euro Swiss, very, 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 very sideways. If you take out the safe haven run, that's the low. Yeah. So it's just range bound. So it's really contracted this week, though. Really contracted. So this seems to be holding this propulsion move. So again, short only really on it. It's tiny ADR though, Euro Swiss, because the Euro and the Swiss move together. Same with the Euro Pound. So I've got short on this at the moment. Quite rallying this morning. So a weak pound. Yeah, weak pound this morning. So yeah, Euro Pound. Again, no real movement over the last few days. Propulsion gap is holding. So yeah, still short on it. My next entry is not until the top of that propulsion gap. So if it does break above that propulsion gap, I'll take another short, and then we're going to hit that double top. So yeah, it looks good for shorts at the moment. But like I said, this is tiny ADR. And the pound is likely to be the second currency to start dropping rates. It's very hit and miss, depending on who you listen to with the pound. I think we're probably looking August for dropping rates. So until then, the pound should be a little bit more bullish than the euro. So shorts. So happy to be short on this one as well at the moment. But that'd be a nice short today if we get up into this area, into the propulsion. But that's holding at the moment. The downside last week. So those are your battle lines. As soon as one of those breaks, we'll be rallying off to the next support resistance. So yeah, short opportunities there. But again, we're bang in the middle of RSI at the moment, going nowhere. Euro New Zealand, sideways all week last week. This is a massive range. Yeah, so we're down at the lows of the range. So right now, technically, it's a range buy. Fundamentally, it's a short. So up to you. It could go either way. I had a short on it from here, which got out of last week. There was a long opportunity in there as well last week. But yeah, so be looking ideally if we can push up into that area for short opportunities. So at some point, whichever reverse alert you get up at the highs is going to be the one which causes that new lower high. Yeah, it's going to start to come down. We've got all these lovely big propulsion targets to the downside. There's way more reason for this to come down than there is for it to go up. So like the look of that. As it broke that low, it's kind of that New York session that dropped. So if we get up to there, yeah. So if we break out of this range from last week, it's probably going to be a false breakout. So any shorts, RSI extensions to the upside, we could look at short opportunities. And Euro US dollar. So shorts on this one. I got out of my shorts on this last week. Yeah. So it should be long-term short. As you can see, market is starting to roll over. Euro dropping rates, US dollar unable to get even inflation down, let alone drop rates. So stance as this one has got to be that. So much better looking short opportunities than longs. But, you know, longs will work as well as long as there's no movement. So there's a long there. Worked out absolutely beautifully. So just if you get long on anything against the euro, just use shorter targets, basically, is the name of the game. So that one that I got into long there, Euro CAD, yeah. So got a long entry triggered by the EA. I spotted it and was like, right, okay, don't really want to be long-term long in a position. So let's just grab a couple of $100 out of it. So just, you know, quick scalps long, ideally, if you're going to go long on anything euro. But, you know, this market at the moment is very, very unpredictable. It's not doing the stuff it usually does. It's not doing what we expect it to do on fundamentals. We've had ridiculous moves on the Aussies and the New Zealands, which make no sense whatsoever when they retain their interest rates. It's just anything can happen. You could find that the euro dropped the interest rates and for some reason the market goes long. We've no idea what's going on at the moment. Nothing's actually making any logical sense. However, history will teach you when you drop your interest rates, your currency devalues. That's the way economics have always worked in the past. Who knows now? But anyway, so yeah, shorts on everything euro. Ideally, let me just catch up on the chat before I have a look at the pound. Morning, Michael. Kennelly, morning, blue trader from Pontevedra. Cloudy today with a chance of rain. Yeah, we've had our summer last week in the UK. Yeah, this weekend was lovely. Got a bit of a red face, bit of a red nose. Good, that was it. Starting to rain again this week. Morning, Agosa. Morning, Steve. Morning, Great Phil. Morning, Champagne. Hello, everybody. That's easy. Right, chat done. So pound. Let me just quickly see what's going on with the indices. Out of the FTSE, long, done, and short break on the DAX, if you can call that a break. So technically it's broken short. I wouldn't exactly call it a momentum breakout, but it's a breakout. And the FTSE's not much different. So very, very little liquidity this morning. Again. Right, pound odd. So really, really, really range bound. for the last week. This propulsion move is holding at the moment, so looks like the market is falling in line with the fundamentals. So much more interested in shorts than longs. However, we have got propulsion gap to come and retest to the upside, and we've got these old orphaned ones up here as well. Might get left behind, but we will see what happens with the news this week. So don't forget, with the Aussie this week, we've got unemployment. So if that unemployment number comes, or rather goes up, there's a good chance that we'll get up to there. So it's difficult to call at the moment, but you should really be able to trade this one in either direction, because there is no interest rate change forecast on these for months. So, you know, any RSI extensions to the upside, short them. Any RSI extensions to the downside, long them. Yeah, just keep doing the same thing, scale into the positions, and you should be fine. Market structure is really, really nice on it. There's loads of movement up and down all the time. So as long as it continues to trade this way, doesn't really matter which way you get in at the moment. But moving forward over the next sort of 2 months, 3 months, want to start changing that bias, unless something changes, obviously. But as you can see, it's starting to get bearish. Short term, long term, obviously, it's not doing anything. So, but that interest rate run there, well, that's not the interest rate run. That's 2023. What was on a daily chart. So that last rally that we had, basically, that's kind of when the interest rate starts to change for the pound. That's what we should start to see kick in reverse. So, you know, same with the euro. When the interest rates start to drop, we will go into a trend, but the trend will still have decent market structure pullbacks in. So if you get caught offside on something, you will have opportunities to get out. It's just tougher to get out in a trend than it is in a range, obviously. So, but right now, could go either way. So, at the moment, obviously, it's not going anywhere, is it? So, these two areas here of resistance to the upside, or three really. Yeah, 125 ADR. If it does break through that propulsion gap, that'd be a good looking short. Obviously, you could try an aggressive short out of the propulsion gap. Personally, I just wait for any kind of relative strength in that direction and then start a short position. But equally, if it does drop, I wouldn't really mind longing it. But look at what you're getting out of the longs at the moment. Yeah. And look at what you're getting out of the shorts. Yeah, it's definitely more bearish stance. But that's because the market is expecting the pound to drop its interest rates at some point soon. But there's still no indication it's going to be any time before summer. And we've got many CPI numbers coming out before then. So it could easily shift back to the upside. We'll see. Either way, great example here, look, pound CAD. Yeah. Shorted it there, flip long, out. Yeah, RSI to RSI within 48 hours. This is what we're seeing at the moment. So if you get any relative intraday strength, there's a high probability of it undoing itself at the moment because the market's got no direction. There's just no reason to go long or short on it. And if it does get a news event, you wouldn't have been in that, but you would have got into it there, out on a V-shaped recovery. Yeah, so that's really what we're getting. So it's just the trouble at the moment is trying to find entry opportunities because it's not going far enough to actually show us where they might take profit from. So highs and lows, again, same stuff, resistance. You got, I mean, that obviously monthly level is a great area, but that's miles away. So that propulsion gap to the downside, 125 to 150 ADR is a good looking long. That's also a previous support. So yeah, but right now it's stuck in the middle of nowhere. So it'd be like looking for shorts up there, looking for longs down there somewhere. Pound Swiss, propulsion, retest short, or back down into there. But right now you're bang in the middle of the range, or what could potentially form a range. So that'd be nice shorts and nice longs out the lows. Again, Swiss franc, not really bullish, not really bearish. So it's really what happens with the pound. This is what we're seeing at the moment, isn't it? If there's news, we get a big move, and then we sit around waiting for the next one. Yeah, so look at the calendar. Is there any Swiss franc news? Is there any pound news? If not, don't expect to go anywhere. That's literally it at the moment. So this week, we got a claimant count change. About it. So you're probably not going to get a massive movement out of that. Pound New Zealand, I've got longs on at the moment. So again, just really badly timed entry. So first entry, and this is what I say about timing entries. You can't time entries. I got in long there because we had a relative strength move to the downside for 2 days. I got out of my short, got into a long, expecting that to hold. We got a news event. Fundamentals shifted it away. Since the fundamentals shifted it away, we haven't gone anywhere for over a week. So, you know, when you get into these positions at the moment, rather than having normal market structure movement, because we've got lots of stuff going on, the market is just going, yep, okay, wait, that's it. So you end up stuck in stuff for weeks on end, unable to do anything because there is no movement. So as you can see, RSI is certainly not extended to the downside, but this is what I was saying. You don't make money trying to time an entry. You make money by waiting for the market to move. Yep. So I'm in there, and I'm in there. And my average is now there. I originally got in there, so I've moved my price down to there, and I'll wait for it to go up. And if it goes down, I'll wait for it to go up at another stage in the future. But there's no reason for this to be massively bullish or bearish in any shape or form at the moment. So there's a good chance that we're going to come back up and retest this. There's a good chance we could come back up there. If those unemployment rates in Australia go up, that's going to harm the New Zealand dollar. That's going up anyway. So we'll see what happens with the Aussie rates this week. But we did break out of the range. So we were looking for a range, that second entry there after the news, obviously. That was a strong fundamental news because it managed to break out of that range. But it is testing that now. So if this week we break back up into here, we'll probably go back up into there. If we're unable to get above that level, we'll probably form a range down here, in which case then it's just a case of taking another entry down there somewhere, move the price down and wait for it to come back and retest the top of this range that we're going to form. But there's no reason for this to trend or grind, fundamentally anyway. So stuck. And pound US. Yeah. Take that new spike out of the equation. There's your range. You bang in the middle of it. Going nowhere. So last news event drove the market obviously down. So because it's bullish US dollar. We've undone that. We're sitting back in the middle now. So these old range lows here are now forming new resistance to the upside. Assuming that the CPI numbers do not come out positive, do not come out negative, i.e. CPI goes up or stays where it is, that US dollar is going to rally and nothing gets in the way of the US dollar. So no news on the pound from interest rates until possibly August. Again, we don't really 100% know yet. Are some analysts, and they'll be saying June / July. Ask other analysts, they'll be saying September, October. Nobody knows. Bailey doesn't know. Bank of England doesn't know. So it's all data driven. So it's why the CPI number is so important, because that is what drives this thing up and down at the moment. So rather be short than long. As you can see, I got out of a long position with a loss there on Thursday last week, because we had that news come out and Bailey started to talk down the pound, and it looked like Bailey was trying to drop the market and say interest rates are going to go down faster than expected. Market wasn't interested. So shouldn't have got out of that. That would have been a nice exit. That was my target, that propulsion gap. So I would have been out of that long. But as you can see, short's really easy. But longs kind of think twice about at the moment. So if we can push up this week into there ahead of CPI, fantastic. If not, nothing happens. So just waiting on that at the moment, sideways. The New Zealand dollars, got one short on New Zealand dollar CAD at the moment, looking for a retest of resistance, or previous resistance, basically, which looking for that to turn into support. So propulsion gap fill, basically. We've also got the propulsion gap to the upside. So if it does rally this week, we'll be looking for sellers to enter the market there. My next short position is going to be above that area. So it'll be getting in second short there, move price up, get out when we come back and retest this propulsion gap again. Nothing much else happening with it, as you can see. New Zealand dollar Swiss, totally sideways, range high shorts. No reason to do anything but sell the highs at the moment and buy the lows and see if that range holds. If it does hold, fantastic, you're out. If it doesn't hold, you'll scale in and get out later. New Zealand US, rather be short. I have a short on at the moment. I had one last week as well. So got another short on this. So that was the first entry there. Off that, we got another entry on this on Thursday last week, which is nicely in profit. I'm just looking to target the range lows. Could well come much further down. So depending on what's happening with this trade, come CPI numbers on Wednesday, if this just sticks range bound this week, what I will do on Wednesday before CPI is just stick a break-even stop on it, remove the take profit. If the CPI number comes out higher than expected for the US dollar, we're going to be down here. Yeah, so I'll adjust my TP down if it's not been hit by Wednesday, and if it's sitting in profit. If it's not sitting in profit, obviously doesn't matter. I'm just doing whatever. But yeah, so short at the moment is a short based on obviously US dollar getting nothing but potential strength. But if that CPI number does come out as a negative, we'll have to reevaluate and see what happens. But at the moment, negative news on the US seems to be very, very short-lived. So we'll see. But much rather be short than long. And obviously, with all the US dollar CAD, all the US dollar CAD pairs, there is only one. With all the US dollar pairs, at the moment, it's like that, but you're much safer kind of long in it, unless that number comes out on Wednesday different. So, you know, with the US dollar at the moment, literally it is a week by week thing. You kind of have to wait and see what that number is, see what the market makes of it, and then have a bias for a couple of weeks, and then really no idea where it's going. Every single month, we're waiting on these numbers, and the directional bias changes based on the data at the moment. So, you know, you can see markets, yeah, oh, brilliant, bullish. Okay, well, let's wait for the next news. That's it. So it doesn't matter which way really you get in, especially with something like the US dollar CAD, because they both move together on the same news. So, so as you can see there, very, very easy to make money on last week. Short, flip long, flip short. Now I'm long again. Yeah, as long as this thing is moving up and down, get in and wait and get out. So I'll get out on that propulsion gap if we get there. US dollar Swiss, again, not a lot. We got this massive propulsion move, which was that was the US rates last month. Since then, obviously, nothing. Same as usual. So potentially shorts out of there. If it pushes down into here, we're looking for longs, but waiting for the news. So I'm not trading any Swiss franc pairs at the moment. I'm just waiting. I'm waiting to see what the Swiss does. So at the minute, I'm kind of just taking a month off the Swissy just to find out what their stance is with interest rates. And as you can see, the Swiss isn't really moving at the moment, so it's no harm done. But I'm just worried about the Swiss suddenly deciding they want to become the dominant force again, and dropping this down very, 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 very quickly. So I just don't know what they're doing with it. They're really out of sync with everybody else. They always have been, but they are, same as the Japanese, they're really out of sync with everybody else. So these two pairs, if you look back in history or do any back testing, these are always the ones that have the most problems. So at the moment, I'm doing a lot of robustness testing on RSI2 strategy, and the yens, I cannot find any profitable setting because it goes into nuts runs. And the Swissy does the same thing. So at the moment, because of the fragility with the market, with all these interest rates and nobody knowing what's happening with inflation looks good, then it looks bad, then it looks good, then it looks bad. These two at the moment are just very hard. These are the ones that are hurting me the most at the moment. I will still trade them because I've made a load of money out of them, both of them, over many years. But right now, in this current climate with interest rates, they're very unpredictable. And the last thing you want is a massive squeeze on your hands when interest rates change. So if you get underwater on something like the Swiss, which may or may not happen, I have no idea. This could sit and do this for the next 6 months, if they don't change the interest rates. But if the Swiss suddenly go mental with their interest rates, it could do that or it could do that. And if you are in a position, and this is where squeezes happen, if you get into a position wrong and then you get squeezed on it, you don't get an opportunity to get out, and then you get squeezed by a fundamental move in the other currency, that's when your squeezes get to the point of utter pain. And at the moment, this thing, every month, you have to close your eyes and hold on tight because you've no idea what they're going to do. We know what they're doing. Or rather, they don't know what they're doing, so we know what it's not doing, and that is going anywhere. With this thing, we don't. So Swissies are just a little unpredictable. Intraday, short term, so for example, with something like the RSI2 strategy, which is an intraday strategy, no problem, because you're using stop losses. If you're using a stop loss, you can trade anything, because it will either or it won't work. Position trading, we are open to long-term cycle. That is our main danger. Long-term cycles changing when we're in a position. So that's the only reason I'm kind of keeping at it with this strategy at the moment. But we'll see. At the moment, it's going absolutely nowhere, as you can see. We've had a little bit of news, and then it wasn't news again. And then we had a little bit of news from there, and nothing. So we're just stuck. As the dashboard says, it's the RSI dash is stuck. At the moment, flat, nothing happening. That's it. That's everything. Hopefully we get some movement on something this week, on some news, but right now, not a lot of opportunities anywhere. Morning, everybody else. LT Smash, greetings from Brisbane. Same here for the weekend. Morning, Tammy. Sunny. Good for you. This is not a weather channel. Who saw the aurora this weekend? Good day. Hood guy, and I'm not affiliated with them in any way. Okay. Whatever you say. Don't know what that means. I've heard rumors on Forex Factory that MT4 could be getting phased out. Oh my God, not again. No, it's not. There is just forget it, right? Let me give you the maths once and for all. I've said it many times. These rumors have been going on for 10 years, right? 10 years. Oh, MT4 is going. What am I going to do? Don't buy anything for MT4. It's all going to go bust. No, it's not. I'll give you the maths, right? MetaTrader, MetaQuote software, licensed software to brokers, okay? Of the two platforms they have, MT4 and MT5, 80% of their license revenue comes from MT4. Okay. They also make money from the marketplace where they sell indicators and EAs and everything else. 90% of their revenue comes from MT4. If you were MetaQuote software and between 80 to 90% of your revenue came from this flagship product, and you had this crappy one that goes wrong all the time that nobody uses and was invented for stocks that nobody trades, would you shut that down and hope everybody flicks to that and doesn't go to TradingView, or carry on making millions a year? I'm not a businessman, but I'm pretty sure they are, and they know what to do. You don't shut down the flagship product that generates 90% of your revenue. Yeah. All the brokers that use MT4 would suddenly go, oh, and all of their customers would go, I can't trade on MT4 anymore. And they go, nah, sorry, they phased it out. Okay, I'll go and find a broker that uses TradingView. I'll go and find a broker that uses CTrader. They'll just lose all their customers. Yeah. Brokers don't want it. MetaQuotes don't want it. Traders don't want it. It's not happening. On the head. Yeah. I've been trading for over 15 years. They've been saying that for over a decade. Basically, when they released MT5, everybody assumed, like Windows, like Photoshop, like everything else that comes out, yeah, if you release a new version of your software, you phase out and stop supporting the old version of the software. Yeah. They didn't release a new version of the software. They released a different platform for trading different instruments. You cannot trade stocks and indices on futures on the CME on MT4. The system doesn't integrate. So they released MT5. They took the same thing, changed the fundamental way that it works so that it can integrate with the stock markets, not CFDs, totally different products. They didn't replace MT4 with MT5, make a new version which is better. They made two different things. Yeah, Mercedes make multiple cars. They don't phase out the A-Class because they've released this one. Yeah, they're two different things, two different purposes. That's basically what MT4 is. Yeah. TradingView will upgrade their software and the old one will get vanished because they only have one. CTrader only has one. MetaTrader has two platforms. That's it. NinjaTrader 8, NinjaTrader 7. NinjaTrader 7 is vanishing because NinjaTrader 8 is a vast upgrade, better, has more bells and whistles. Therefore, everyone goes, ooh, I'm trading on this one now because it's better. That's not what a MetaTrader is all about. So forget it. Just don't buy anything for MetaTrader 5. It's crap. It's unreliable. They break it all the time. It has an auto-update system that you do not want to use, but you're forced to. It's slow. It only uses one processor out of the 24 I've got because it doesn't want to do anything else. It's just shit. So just don't use it. There you go. I should clip that and put it up because I get asked that question probably every 2 or 3 months because someone finds it. It may well happen in the future and I might be proven wrong. All I'm saying is for the last decade, I haven't been proven wrong. And, you know, from a business perspective, it's commercial suicide. You might as well just shut your business down, MetaTrader, if you're going to get rid of MT4 because everybody uses it, me included. Yeah. Very few people use MT5. There's just no reason. No reason for it. It's slow and crap, basically. Sunny and warm in Spain. We're checking the world weather. If we're checking the world weather, yeah. Up 6.5K this month, but really slow. Good one, Harold. Good job. Right, well, that's it, really. Nothing else to discuss today. We're waiting today for news. We're also, it looks like, waiting for the banks to wake up. They haven't done anything today. Rubbish. So, so basically, just keep your eyes peeled on the RSI dash or ADR, whichever you're using, or both, and just see if any setups happen this week. But until we get to Wednesday, unless the market suddenly wants to pile out their cash into something for some reason, there's no real reason for anything to move until Wednesday. So even with the PPI figures tomorrow, we'll probably get a spike off of them, which will probably be a good mean reversion opportunity because there's no reason to dump any substantial directional bias cash into any FX pair until you know what's happening with those CPI figures, because these numbers are the only thing the market is paying attention to at the moment. What is the US going to do with its interest rates? That number is what they use to make their decision. So it's going to have a big impact this week. The only unknown is if it comes out as forecast, what the market will make of that. So if we get a forecast, if we get the 3.4 and the 0.4 on the month, that will be a difficult one because we will then be wanting to wait for something out of the Fed to say, okay, guys, what do you think of this? Is it good that they haven't gone up or down? Or does it mean it's bad because we were expecting them to come down? Yeah, so that's the question this week. What's the market going to make of it? We know if it comes out as a bull or a bear number, it's going to do that. But if it comes out as expected, it's going to be difficult to read. So if you've got any positions on ahead of these news events, just worth protecting them or taking them. Yeah, because if you've got money in the bank, you can spend it. If you've got an open P&L, useless. So I'll be banking anything that's in profit ahead of the news events just in case this week. Just keeping it tight at the moment. Just want to get stuff in the bank, really, as fast as possible. Because market ain't moving. Right, that's what I've got for you today. There's nothing much else to discuss because we're waiting for news. So this week I'm doing. I'm thinking about going. I was thinking about going back to the normal 8 o'clock 2:30 routine, but this week I've decided to do 2 afternoon sessions because we've got PPI and CPI, which makes sense obviously to be on for those. Morning on Thursday, we'll have a look at the unemployment rate for the Aussie. And then I'll trade the New York Open on Friday because there's nothing much to do on Friday. So, because there's no news. But I was toying with the idea of moving back to the 8 o'clock 2:30, which is what I used to do. Because the reason I wanted to obviously fall in line with news events was because obviously that's what drives the market. But in hindsight, having done this now for a month or so, doesn't really have any benefit. And I kind of want to start getting back into trading these indices because I think they are going to start to move more nicely now. I'm noticing much cleaner breaks now. The market is starting to come back to life a bit. So I want to start getting back into trading SIH, really. So, but I'm undecided. So this week I'm going to do the normal news, but I might start to move back to set routine. I vote back to routine. Yeah, it's easier, and then I don't have to update this every week either. So what I would do though is I wouldn't do the same one. I preferred that as it's in line with how most trade the open. Yeah, but I don't trade the open, do I? That's the thing. The reason everybody trades the open is because they're all trading stocks and indices. I don't do that. This Forex is my main income. But I did make very good money out of the indices when they were moving properly, but then they stopped moving properly. But what I would probably do is an 8 o'clock, a 2:30, then an 8, then a 2:30, and then an 8. So that's what I would move the routine back to. I don't want to do 2 a day because I want to get other stuff done. Doing 2 a day is just too much because just too much. I've got other things I want to do rather than just stream twice a day, every day. In the MT5 marketplace on your products, you should say you prefer MT4. I don't think they'd like that very much. It doesn't matter what I say. People will use what they use. Some people prefer MT5, and that's absolutely fine. Choose what you want, but it's people use MT5. Carry on. It's just. I don't have any problems with MT4. Yeah, I've been developing products for 4 or 5 years now, and I've been building them for longer than that. I've never had a problem with MT4 ever. I have never, ever had to push out an update for MT4 because MT4 has broken something, ever. Not once. I've updated stuff because I've updated stuff. But MT5 have to push out updates, not all the time, but I don't update stuff on MT5 until at least 3 months after a release. And the reason I don't do it is because if you update stuff when they break stuff, you will be permanently updating stuff and then putting it back to the way it was before, when they fix the problem they introduce. Yeah, they just introduce bug after bug after bug. I play a game called Star Trek Fleet Command, right? The company that run that, Scopely, are very well known for every time they update something, they break something. So every time there's an update in the game, we have this like standing joke where everyone goes, right, wonder how many new features they will have introduced this time. The new features basically are bugs. And that's all they do. They introduce bugs and then they fix the bugs. And then they update something to introduce bugs and fix bugs. That's MT5's cycle. I don't know how software companies get into this cycle, but they do somehow. It's a cycle of it's something to do with, I guess, the framework where there's too many moving parts, maybe. I don't know. MT4 just doesn't do it. For a start, they don't push out auto updates, which breaks stuff because they don't auto update it. Every now and again, you get one, but that's usually because there's a market requirement, not a feature or functionality in the software. But, you know, this is the thing that annoys me the most about MT5. When they update stuff, they don't introduce anything new, do they? They just update it. Yeah. So they don't go, hey, here's the new version of MT5. This is what you get now. What you get now is something broken. I don't know. I just don't get it. But not my problem. It's not my problem. It's their problem. I'm thankful for the streams at any time. Good. Yeah. You can always watch the replays anyway. So if you aren't watching the live, come on in the afternoon at the open and watch this morning, you know, and vice versa. MT5 freezing signal dropout. Very user unfriendly for Forex. Those damn arrows hate it. Yeah, see, this is the thing. It is user unfriendly for Forex because it isn't a Forex software. It's for stocks. Yeah. This is the thing that they should have done. What they should have done, you got MT4. Yeah. This is your CFD platform. Any CFDs that you trade, including stocks, because you can trade stock CFDs because it's a contract for differences with your broker. It's got nothing to do with if the market price of NVIDIA is 1.6, your broker can quote you 1.3 because it's a contract for the difference in price that they're quoting you. It's made up by your broker. Yeah. That's what MT4 is for. If you want to trade the stock market through the Chicago Mercantile Exchange, get MT5. You will not be able to trade CFDs. That's what they should have done. What they did was introduce a new piece of software that traded or tried to do everything. The interface and, more importantly, the quote price is different on the two, yeah? Stocks are quoted on open. CFDs are quoted on close. Yeah, big difference in data. You go and get data, right, and you change it from open to close price. It's a totally different result. Yeah, they work in different ways. The CME has a completely different quoting system to Forex. That's what they should have done. They should have said, right, if you're using MT5, we don't do Forex. All right, I'll have MT4 then. Never have a problem. But if you quit, and this is the problem, this is the thing. If you trade stocks, why are you using that? There are so many better platforms out there for trading stocks than that. All of them, basically. Any platform out there is better. Let's face it. Ninja Trader, Jigsaw, Rhythmic, Trading View. You can reel off Think or Swim, fantastic. TC2000, amazing. All stock trading platforms. MetaTrader 5, it's awful. There's no scanning systems. There's nothing. It doesn't do anything. It literally does charts and it integrates with the CME. That's it. That's all they did. That's why it's so crap. It doesn't do anything. Awful. Just don't use it. End of rant on MT5. If I traded stocks all the time, I would use either TC2000 or I would probably use TC2000, actually. I think that's probably the best software out there for trading stock market. But anyway, I don't. So there you go. Right. I'll leave it there because I've got nothing else to talk about. I'll be back on tomorrow afternoon at 1:15. We will be looking at the PPI figures, seeing what happens with those, and obviously just have a look at what's happened today. Judging by the opens today. Oh no, we've got a bit of movement now. So DAX, TP on the DAX. So 2 clean breaks today, straight in, straight out. Very nice. That would do me. So yeah, there's not been a lot of movement this morning, so I don't think we're going to do an awful lot today. As I say, I don't think the market's going to want to dump any large amounts of cash in until Wednesday. So just keep an eye on ADRs. Any ADRs this side of Wednesday, probably not bad mean reversion opportunities. If we get something pushing, it's probably not going to be able to sustain it. So unless obviously we get any news. So, but we'll have a look at everything tomorrow afternoon, see if anything's moved. And then on Wednesday, we'll do a full analysis of all the pairs again after the PPI figures and get ready for CPI. Yeah, tomorrow won't do anything. We're on after CPI on Wednesday, then we'll do a full analysis of everything. And hopefully we'll have an idea where everything's going. All right, so have a good day. Anything you need, let me know. Otherwise, I will be back tomorrow afternoon at 1:15. Have a good one.